All right. If you hear whatever, great. If not, doesn't matter. I'm going to post this. I'm recording it just real quick. Just giving some real quick thoughts on the market into March. As James says, no one can tell you exactly where it's going to go. I wanted just to look and show an example of potential. So you have a reversal, which is a failed breakdown of a support level. And generally a failed breakdown, that's what I caught on Friday, is the highest opportunity for a push move. So this is what I was catching Friday once we reclaimed. That's when the first move was the 585 reclaim and traded it to 586.49. I thought it would make it to 586.50. It got within a penny of that. It came back down. I was gone then. Otherwise, we would have caught the second one because it was even more obvious. And when I saw it, that's when I made the call. I saw it coming before it happened. And, you can't just be here every second. And they did a good job of waiting till a Friday afternoon to do this. Do I wish I had been here? Yeah, because what you see, what I saw just looking at my phone, I could see what was building and about to unfold. And that's why I gave the Amazon and the Microsoft options, because I thought those two were the prime, having watched their action throughout the day of making a bigger move than something like, let's say, ARM. Although NVIDIA did make a good move, ARM did not. It only moved like $1.50. Whereas Amazon and Microsoft moved $4 each. So it was definitely the right ones to be in. But if I had been sitting at a station, it would have been, grab anything for a nickel. Some of these expiring calls for a nickel, because we literally ran $7 on SPY, and something that cost you a nickel, you would have gotten $2 for, maybe $3, depending on where the price action was. But now here's what I'm wanting to see is, and I love the fact that the markets give you each of these scenarios. You have a reversal here that was a single reversal, right? This is my favorite. It's much easier to trade when I see this. I draw this all the time for people, right? Because generally that's telling you that the market is going to have an explosion move up out of this. And so I really like this pattern here, right? This one, it's going to be more in the vein of here, which you had a Model T move on the next day. You see that? Okay. Isn't it interesting how you get all of these setups that you're going to be watching for pattern? Is it going to be a breakaway move with a gap in the futures that you're going to be watching? And the thing about it is, this was a gap open that came down to the Model T also from this pattern, right? It would have been the next day that you would have been even more, into buy and hold. But this one came down to Model T as well, and then came back up. It opened on a gap up, came back down. That could happen. We could be up here. By the time the market opens, it fades some, and then it takes all that away, maybe even down into Model T. That's what we got to be prepared for. That's what both of these did. Okay. The bottom, both came back into Model T. Very interesting, right? Here is one that took all the way back down. Imagine if this came all the way back down to, let's say, this close here. Okay. And then the next day opened down here, came down all the way again, and then came all the way back up and closed. So it opened up here again, came down and up. This is going to be what we're having to watch, and why I say that we're going to be watching for structure, because I don't care which of these sequences it takes, as long as it takes these. Here's another example here, right, of a bottoming. Then that's what we're going to be looking for in the sequence. So you either buy the bottom, which we did, okay, or you wait until the bottom is confirmed in, Okay, so we get a confirmed bottom, then we can at least trade on a short view. So as you keep going backwards, you'll see how these bottoms form. This was an inside day. Let's say Monday is red, open, and you see that it's just chopping. To me, very much looking for this to have follow through then. But look how much they shook this. And these are the days that I was saying, that looks like shakes. That looks like shakes. That looks like shakes. So there was nothing that showed the markets were failing. I just kept saying, all I'm seeing today is fakes, is fake breakdowns. And so they're shaking you. When we're observing that, then we try to find lows of the day and make some buys, right? If that's what is being spotted and seen. So this was the only one right here that had the reversal up, and it didn't make quite to Model T. It came close, but it did make it to the top of the body here before continuing on. So anyway, each of these has its own design of how a bottom forms. And so I want people to understand that we're not looking just for follow through Monday. We're looking for structure of completion of a bottom. And that's the difference. And they take different forms of how they do it. And so you're going to have to be a combination of, of good trading entries and then patience as well on that. So I just wanted to give that quick kind of overture as we go into Monday. I like everything. I don't think it was a hook close. Doesn't mean that you're not going to have a downtime on this. It just means that I don't think it's a traditional hook close because of the volume that poured in. They put a lot of money. I think someone said it was in the last 30 minutes, $800 billion came into the market. Well, that's not you and me. That is institutional buying. And so whether it was covering and then they're going to bring it down to now buy, we'll have to wait and see. That's the reason I was doing this, is to let you guys know what I'll be watching for, and we'll watch for it together. Okay. So look forward to tomorrow, and that's it. Short and sweet. I got a meeting.